Welcome to Kharoo channel. We are solving the sums of depreciation as per written down value method, and in this video we are going to solve practical problem 3, that is on page number 246. Let's go through the question. Question 3. Mahesh Traders Solapur purchased furniture on 1st April 14 for 20,000. So on 1st April 14, furniture 1 was purchased at 20,000. In the same year, on 1st October, additional furniture was purchased for rupees 10,000. On 1st October 14, that is same year, furniture 2 was purchased for 10,000. Then on 1st October 15, the furniture purchased on 1st April 14 was sold for rupees 15,000. This is first machinery, right? 1st April 14 we have purchased for first machinery F1 that was sold on 1st October 15. So F1 was sold for 15,000, and on the same day a new furniture was purchased for rupees 20,000. So same day F3 third machinery was purchased for 20,000. The firm charged depreciation at 10% per annum on reducing balance method. So the method is WDV, reducing balance method, that is written down value method at the rate 10%. Prepare furniture account and depreciation account for the year ending 31st March 15, 16 and 17. For 3 years we have to prepare ledgers of furniture account and depreciation account. No journal entries is asked. So with this summary, let's do the working. Working note 1, calculation of depreciation. Method is WDV at the rate 10%. We will need particulars, and we have purchased 3 machinery F1, F2 and F3, and last column total depreciation. We need purchase date and purchase amount. So for furniture 1, the date is 1st April 14, 20,000. Second machinery 1st October 14 for 10,000. And third machinery 1st October 15 for 20,000. So let's start with depreciation. Depreciation for first financial year is 14-15. FY 14-15. And depreciation rate is 10% on written down value. So in financial year 14-15 there are 2 machinery, right, from April 14 to March 15. So we have these 2 machinery F1 and F2. Third machinery was not there, so we'll put a dash there. And furniture 1 was used for the entire year, so the depreciation will be for full year on 20,000. So that is 2,000. But the second machinery was purchased in between the year on 1st October. So October, November, December, Jan, Feb, March, for 6 months we will have to calculate the depreciation. So the working will be 10,000 into 10% into 6 divided by 12. So 10,000 into 10% is 1,000, and 1,000 ka half will have 500. So total depreciation after first year is 2,500, and WDV as on 31/3/15 will be 20 minus 2, 18,000, and 10,000 minus 500, 9,500. Total will be 9, 18, 27, 27,500. Then in second year, depreciation for financial year 15-16, as this is WDV method, we will calculate depreciation on written down values, these written down values. So in the year 15-16 we have these transactions, right? On 1st October 15 we have purchased one asset furniture 3 and sold furniture 1. So let's first calculate depreciation on furniture 3, new asset that we have purchased. We have purchased it on 1st October, right? So the depreciation will be for 20,000 into 10%. The machine was used from October, November, December, Jan, Feb, March. That is 6 months. 6 divided by 12. So 20,000 into 10% is 2,000 and half of 2,000 is 1,000. And 20,000 minus 1,000 is 19,000. Second machinery, it was used for the entire year. So the depreciation will be for the full year. That will be 9,500 into 10%. 10 less 950, right? 9,500 minus 950 is 8,550. And the first asset, it was sold on 1st October. So it was also used for 6 months, right? From April, May, June, July, August, September. On 1st October, it was sold. So the calculation will be 18,000 into 10% into 6 divided by 12. 18,000 into 10% is 1,800 and half of 1,800 is 900. So the WDV value is 17,100. WDV as on 31/3/16. So the total of depreciation 900 plus 900 1800, 2,850, and the total of WDVs 17,100 plus 19,000, that is 44,650. And then depreciation in the third year, that is last year, depreciation for financial year 16-17. In this year, there are no purchase or sale transactions. So we will only calculate the depreciation. First furniture, the first asset was sold, so no depreciation on that asset will be charged in third year. But we have furniture 2 and furniture 3, and these assets were in the business for the entire year. So we will calculate the depreciation for full year. So the depreciation will be 8,055 and 1,900. So here 19 plus 8 is 27,55. WDV as on 31/3/17. 8,550 minus 855 will give 7,695, and 19,000 minus 1,900 is 17,100. 17,100 plus 7,695. 7,695 will give 24,795. 24,795. With this, our working note 1 is ready, and we have got the WDV of the asset sold. So now we can do the working note 2 for finding what was the profit or loss on the sale of asset. Furniture 1 was sold, so we will need sales amount. From that we will reduce WDV. Which WDV? WDV as on date of sale. As on, when was it sold? On 1st October 15. This WDV is as on 1st October 15. So here we'll have 17,100, and from sales we have got this amount. We have received more than the book value, that is 17,100. The sale amount is more than WDV, that is book value. So we have got a profit of 20,000 minus 17,100, that is 2,900. So we have got a profit on sale of F1 asset, furniture 1. Now our both the workings are ready. We can open our ledgers. In the books of Mahesh Traders, Solapur, furniture account and depreciation account. In financial year 14-15, 2 furnitures were purchased, furniture 1 and furniture 2, right? First furniture was purchased on 1st April and 1st October, 20 and 10,000. So we will pass entries for these two purchases. What's the entry for purchase? We debit furniture account when we buy furniture, right? When there is addition in furniture or when the value of furniture increases, what comes in is the rule, right? So let's pass the entry. 1st April 14, furniture account debit to bank account 20,000, and again on 1st October to bank account 10,000. No other entries are there other than depreciation. Then we'll pass a depreciation entry. 2,000 plus 500, we have this total 2,500. On last date 31/3/15, by depreciation account, the entry is depreciation account debit to furniture account. So depreciation account is debited, right? Depreciation account debit on 31/3/15 to furniture account. Amount is 2,500. Here on credit 2,500. So all entries are passed. At the year end, we will close the books for furniture account 30,000, 30,000. 30,000 minus 2,500, 27,500. The balancing figure is by balance close down 27,500. This amount we will carry forward on next day, 1st April 15, to balance brought down 27,500. This is the amount 27,500 in the working. And for depreciation account, since depreciation is a nominal account, we will transfer the entire balance to profit and loss account at the year end. So on 31st March 15, by P&L account, the transfer entry is profit and loss account debit to depreciation account. So that way total balance will be transferred to profit and loss account and the balance of depreciation account will be nil. With this we have closed the books of first year. Now in second year. In second year there is one purchase and one sale. So we will pass first third assets purchase entry of 20,000. Furniture account is debited on 1st October 15 to bank account. We paid through bank 20,000. And now the sale entry. First furniture is sold for 20,000 and the WDV is 17,100 at that time, at the time of sale, and we have got a profit of 2,900. I accidentally took 20,000 as sale amount. The sale amount is 15,000. Let me correct here. The sales amount is 15,000 and WDV is 17,100. So 15,000 minus 17,100, it is 2,100. We are getting a loss of 2,100. Loss on sale of asset, furniture 1. And we have corrected this amount. As this asset is sold, we will not take this value in the closing WDV. So back to furniture account. We have sold this asset for 15,000. So we have received these funds in bank. Bank account will be debited. Debit the receiver. And the asset of 17,100 is going out of business. So we will credit what goes out. Furniture account will be credited. And we debit the losses, expenses and losses. With that rule, this expense will be debited. So what will be the entry? We want to credit furniture account. But before this, we'll pass the depreciation entry. Depreciation on the asset sold. Here we have this 900 amount. Okay. So furniture account will be credited for depreciation. On which date? On date of sale. That is 1st October 15 by depreciation. Amount is 900. And then our sale entry, we want to credit the furniture account with 17,100 on 1st October 15 by bank account. We have received 15,000 in bank, and by loss on sale of asset, furniture account, the loss is 2,100. So the total amount 15,000 plus 2,100, the asset of 17,100 is going out of business. Correct? So the sale entry is done, and now what is remaining? The depreciation on the remaining assets, furniture 2 and furniture 3 is pending. 950 plus 1000, that will be 1950. So depreciation at the year end on 31st March 16 will be by depreciation, that is 1950. This is for furniture 2 and furniture 3, and this was for furniture 1. So all the entries in furniture account are done. Now depreciation account is pending. In depreciation account, we have 2 entries to post. One on the date of sale, that is 900, and the other at the year end on remaining 2 furnitures. So these 2 entries we have to post on 1st October 15 to furniture account 900, and at the year end to furniture account 1950. So we will close the book 2,850, 2,850, and at the year end we will transfer the balance of depreciation account to P&L account. So by P&L account to depreciation account will be the entry 2850. Depreciation account will be credited and the amount is transferred to profit and loss account. This amount 2850 matches with our working 2850. With this, the posting of second year is done. Depreciation account was closed. Here we have to close the furniture account also. Let's close the furniture account. 27,500 plus 20,000 is 47,500. 47,500 minus 900 minus 15,000 minus 2100 minus 1950. That will give the balance of 27,550 at the year end by balance closed down. The next day we will carry this amount forward to balance brought down 27,550. This amount matches with our working also 27,550. With this, second year postings are done, and now in third year there are no purchase or sale entries. We just have one depreciation entry at the year end. So let's post this entry in our books on 31st March 17 by depreciation 27,550. Now we can close the books. 27,550 27,550 minus 27,550 will get the balance of 24,795. This amount is here in our working also 24,795. So on last date of the year by balance closed down, and this amount will carry forward in next year on 1st April 17 to balance brought down 24,795. So furniture account is closed. Now we have to pass this depreciation entry in depreciation account. That is at the year end 31st March 17 to furniture account, and we will close the books 24,795 24,795, and the balance amount we will transfer this amount to profit and loss account at the year end. Oh, this is 16 by P&L account. So with this, our depreciation account is closed. So what have we done in this sum? We have purchased 3 furnitures, furniture 1, 2 and 3, and first furniture we have sold it in second year. So in working note 1, we have calculated the depreciation amount using the WDV method at the rate 10%, and we got the WDV as on the date of sale, that is on 1st October 15. But that amount, that is 17,100, we used to find what was the profit or loss on sale of that asset, on sale of furniture 1. With these two workings, working note 1 and 2, we opened furniture account and depreciation account. We did the posting for 3 years, for financial year 14-15, 15-16 and 16-17. So this is your practical problem 4 as per WDV method from your textbook exercise. That's it for the video. If you find this video useful, please like the video, share it with your friends and subscribe for the future notifications.